In this video, we are going to look at the split in the home sellers and home buyer sentiment. Hey guys, it's Mac Rogers. I'm a real estate broker here in the East Bay in the San Francisco Bay Area. Welcome to the channel. There's been a lot of talk about the housing bubble and a housing crash, and I've gone over this before and how it's not a bubble. So we won't be going over that in this video. What I've said I see happening is an eventual slowdown. A slowdown that could be like a crash, or actually that could lead to prices going down. And you know what? It could already be here. A recent article from Realtor magazine states that 77% of consumers say it's a good time to sell a home compared to last month's 67%. This is a record high according to Fannie Mae's Home Purchase Sentiment Index, where they surveyed 1,000 adults on their views of the housing market. So why are these sellers or homeowners saying that? Now, there's certainly plenty of reasons to feel so upbeat if you own a home or planning to sell a home. Number one reason, existing home sales prices were at a record high in May and up nearly 24% compared to a year earlier, according to the National Association of Realtors. Number two, these higher home prices have translated into greater equity for home sellers. In the first quarter of 2021, the average homeowner saw their equity climb nearly 20% in the past year, gaining about $33,400, according to a report from CoreLogic. The forecast for 2021 is almost another 9% price appreciation. So the home sellers are all optimistic because of these reasons. Meanwhile, home buyers aren't feeling as good about the housing market. 64% of consumers say it's a bad time to buy a home, up from 56% the previous month. Also, a record high according to Fannie Mae. Doug Duncan, Fannie Mae Senior Vice President and Chief Economist, has this to say. Consumers also continued to cite high home prices as the predominant reason for their ongoing and significant divergence in sentiment towards home buying and home selling conditions. While all surveyed segments have expressed greater negativity towards home buying over the last few months, renters who say they are planning to buy a home in the next few years have demonstrated an even steeper decline in home buying sentiment than homeowners. It's likely that affordability concerns are more greatly affecting those who aspire to be first-time homeowners than other consumer segments who have already established home ownership. Basically, what he's saying here are people who are already homeowners who are also thinking of buying a home also don't think it's a great time to buy. And I certainly see that in clients that I talk to. Most of them are like, wow, we can get this much for our house. And then on the flip side of that, it's also, wow, the house that we like is this much if we can even get it. This feeling is even more so with renters that are thinking of buying. And most likely it's because they don't have any built-in equity that they can tap into, unlike someone who is already a homeowner. To them, it seems like the hurdle is much higher. Now, despite this diverging views on home buying and selling, the expectations are still that demand for housing will remain high. We still have near historical low mortgage rates. Consumer confidence about the economy and job situation, household income, it's higher than last year when the pandemic shut us down. Speaking of mortgage rates, mortgage applications fell again. It has fallen to their lowest level since the beginning of 2020, prior to the pandemic. This is for both applications for refinancing and for home purchases. This decline occurred even as mortgage rates fell, according to the Mortgage Bankers Association. For a number of months now, the talk has been mortgage rates going higher, and it did for a very short time, but it quickly came back down again. This marks the second consecutive week of drop in mortgage demand, which is largely viewed as a gauge of future home buying activity. You know, obviously, if you have less people applying for mortgage loans, you can gauge or forecast how many people are interested in buying a home. Mortgage applications for home purchases dropped 1% for the week and are now 14% lower than a year ago, according to Joel Kahn of the Mortgage Bankers Association. Swift home price growth across much of the country, driven by insufficient housing supply, is weighing in on the purchase market and is pushing average loan amounts higher. A little caveat here. 2 consecutive weeks doesn't make a trend. But everyone is so hypersensitive that we have to know every time something goes up or something goes down right now. You know, there could be other non-real estate factors that are contributing to these mortgage applications going down. I think one of them could be that people are going on vacation and hitting the pause button on house hunting. I mean, we've been locked down for almost a year. Have you seen the news about Hawaii? It seems like half of mainland USA are there. Here's the reality out there right now. Low housing inventories and high home prices is starting to take a toll on the market. There's certainly a point where you're just gonna run out of buyers. However, for housing or real estate, the good news is that we're not really running out of buyers. There may be less buyers out there that are not willing to overbid and compete, but again, they are still out there, kind of like in the shadows, if you will, waiting, just waiting to pounce. And this buyer demand that we have, even though it's going down, is still more than what we have in inventory. This is why we are still seeing competition for housing. In fact, there's still a lot of neighborhoods in the cities that I serve that hasn't seen or felt the slowdown yet. Speaking of inventory, there's a bit of good news in that front for home buyers. An important factor in today's market is the number of homes for sale. While inventory levels continue to sit near historic lows, there are indications that we might have hit the lowest point. According to Odetta Kushi, Deputy Chief Economist at First American, she recently commented about our supply challenges. She said, "It looks like inventory may have hit a bottom. Unsold inventory in May was 2.5 months supply, up from 2.4. Take a look at this graph from the beginning of the year. Inventory starting to go a little bit higher. We're still not close to a balanced market, which could be 6 months supply of homes for sale. However, we are seeing a slow but steady increase in homes coming up for sale." So this kind of begs the question for many buyers and sellers. What does that mean for me? If you're a buyer, more inventory coming to the market is a welcome sight. More supply means more options and less competition, which could also mean fewer bidding wars. According to the latest monthly housing market trends report, supply levels are continuing to increase, which is different from a typical summer market. In June, newly listed homes grew by 5.5% on a year-over-year basis and by 10.9% on a month-over-month basis. Typically, fewer newly listed homes appear on the market in the month of June compared to May. This year, growth in new listings is continuing later into the summer season, a welcome sign for a tight housing market. If you're having trouble finding your next home, this news should give you hope and motivation to keep your buying process moving forward. Experts project mortgage rates will begin increasing, which will make purchasing a home less affordable as time passes. You can still capitalize on today's low interest rates, so stick with your search as more homes come to the market. In other words, waiting doesn't really make any sense because, one, prices are not falling or it's not forecasted to fall. For example, here in Castro Valley, if you're waiting for that $1 million home to go down, it's probably not going to happen anytime soon. As a matter of fact, by the end of the year or next year, it could be 3, 5, or even 10% higher or more expensive. Then you add to that the second thing, which is mortgage rates projected to go higher, and you literally just waited for your monthly mortgage payment to go higher or go up. Your down payment also goes up, and associated fees that goes with buying that house goes up as well. So continue with your home search. The inventory side of the equation is showing signs of improvement. However, the mortgage rate side, that could be going against you. Let's go back to the seller side of the equation. Sellers, our supply challenges aren't over yet. So now is the time to sell. If you've been putting off selling your house, you shouldn't wait much longer. This year's month-over-month gains in homes for sale have helped buyers, but we're still very much in a seller's market. As the graph below shows, even with the number of homes for sale rising, we're still way below the supply levels we've seen historically. Of course, more homes are coming to the market now and more are expected in the coming months. Selling your house this summer gives you a chance to get ahead of the competition and maximize your sales potential before more homes are put on sale in your neighborhood. So quick recap before I end this video. 77% of consumers said it's a good time to sell, up from 67% last month. 15% of respondents said it's a bad time to sell. I wonder what those 15% are thinking. Anyway, 64% of consumers said it's a bad time to buy a home, up from 56% last month. 32% of respondents said it's a good time to buy a home. 48% of respondents said they expect home prices to rise over the next 12 months. That's up from 47% last month. 57% of respondents expect mortgage rates to go up over the next 12 months, up from 49% last month. 30% expect mortgage rates will stay the same, and 6% expect rates to decrease. 88% of consumers say they are not concerned about losing their job over the next 12 months, up slightly from 87% last month. 27% of respondents say their household income is significantly higher than it was 12 months ago, a drop from 29% last month. 56% of respondents say their household income is about the same as last year, while 13% say their household income is significantly lower. And finally, inventory is starting to go up, but nowhere near where our historical levels. You're gonna hear a lot of doom and gloom out there about these data that I just shared with you. But the bottom line is that the fundamentals are still strong. Our economy is good. Mortgage rates are low. Inflation is still in check. In fact, I've even read some experts actually predicting deflation. The banks are not giving away money or just lending to anyone. So in terms of mortgage risk, it's not there at all. All the buyers that are getting approved are highly qualified. Inventory is not just going to magically appear out of thin air. So this run that we've experienced in housing could slow down, which is good, but might not go down anytime soon. Hey, I hope you liked that video. Please comment, like, share, and subscribe. If you're thinking of selling your East Bay or Bay Area home, let us know how we can help. Home buyers, it's still competitive out there right now. Let us help you get the home that you want this year. Thanks for watching, you guys.